Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting. Our topic today is equity, share dividends, and share split according to the IFRS. So, guys, first of all, subscribe our channel, like our video, like our Facebook page, Accounting Hub by Dr. Scarpin. It is very important to us. What is share dividends? Distribution of additional shares of stock or shares to current shareholders of the corporation. Affects neither the asset nor the liability of the firm. Shareholders' proportional interest in the firms remains unchanged. We are paying our dividends in shares instead of cash. And we have two kinds of dividends. Share and large share dividends. Small and large share dividend. Small share dividend, less than 20 or 25%, depending of your country, of corporations issued shares, recorded at fair market value. And we do it based on assumption that it will not change the market price because it's very low number of shares. Large share dividends, we record it at par value because it will change the market value. For instance, a share of Alphabet Inc., that is Google, it is more than $1,000 for quite some time. If they split it in two or they do a very large share dividends, and then the market price will go down because there will be much more shares in the market. So that's why we record it at par value. And share split, issued of additional shares to shareholders according to their percentage ownership. Reduction in par or stated value per share. Increasing number of shares, reduce market value. No journal entry recorded. So, for instance, Alphabet decide to split their shares in two. What changes the market value? Instead of $1,000 will be $500. If I am the owner of 10 shares, I will be the owner of 20 shares, but nothing changes. Okay? So, before the thank you, let's go to our Excel file. And all of our Excel files are free, and the link to download it is in our video description. So here, Skype Incorporation declare and distribute 10% common stock dividends. Let's consider that my total shares it's $100 million, not stock dividends. Come on, we are not in the US. Share dividend. When the market value is €1 for common share, and the market value is $15 per share. Okay, so let's change it here. It's almost a live video, or it is a live video. And instead of stock, share. Okay, now we're good. So here, share dividends. So what do we do? So here, share dividends. How much is it? So how much is it? 10 million shares times, oops, oh, come on, times 15, 150. Instead of share capital, ordinary here, we are only declaring these dividends. We are not issuing yet. So we will credit a temporary account, ordinary shares dividends distributable. So it is 10 million shares times 1, and the additional or the share premium ordinary will be the number to balance. And then when issues dividend shares, we close these ordinary share dividends distributable, 10 million, and we credit share capital. Okay? And when we are working with large dividend, for instance, 80% share dividend, so 80 million shares, market value of the €1 per common share is uh, $15. Okay, or the instead of common share, work with the right names, ordinary share. And here, ordinary share. And we do the same. And then we do just like uh just like a cash dividends here. Retained earnings, credit, ordinary shares, and then when we issue it, ordinary shares and share capital ordinary. And for the small share dividends, our debit is not retained earnings, is share dividends. That is a contract out of retained earnings, but we disclosure both. Okay, guys, so thank you so much. Questions or comments, leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.